Welcome, I'm Raj Venugopal. Today we are going to talk about Gold Investment 2.0. Traditionally, people tend to believe that gold is the best and safest investment of all investments. While there is some truth to it, it is not completely true. This belief system has been passed over generations, and so it became one of the safest investments that people tend to hold forever. It is more of an emotional investment than a financial investment. We know from historical data that gold price goes up in value over a period of time and was grown exponentially in last 2 decades. With gold becoming a commodity that can be traded online, it is becoming more like a world's currency. Supply and demand of gold in the world market decides its ultimate market value. Gold in its pure form is indestructible. It does not rust, corrode, and cannot be destroyed by fire. Gold can neither be created nor destroyed, it can only be changed from one form to another. As of today, gold price is down to $37,538 per kilogram. This is a lot of money, and there are no financial service available to take a loan if you do not have enough money to buy this asset. Moreover, if you can buy this asset today, then you need to find a safe deposit box to store it. There is additional cost just to store it. Now, instead of buying physical gold, what if you decided to buy a gold producing company? For example, let's take Gold Corp Inc. It is one of the largest gold producer in the world. As of today, the company stock trades at $15.88 per share. For the amount of 1 kilogram of gold, you can own 2,363 shares of Gold Corp company. The company has a dividend yield of 3.78%, which translates to a cash payment of 5 cents per share every month. In dollar amount, the cash flow is $118.15 paid to its investors in the form of dividend every month, and there is no need for any storage cost. Please note, stock investment is riskier investment than investing in physical gold. In our example scenario, a dollar increase or decrease in stock value will result in a gain or loss of $2,363 respectively. Let's say in next 10 years the gold value doubles. This will result in more than doubling of both the stock value and the dividend yield paid out to the investors every month. As an investor, you also have the option to reinvest the dividend amount on the same company, increasing your ownership stake with the business. This will further increase the dividend payment as time goes on. Now let's consider a situation where gold price remains the same for the next 10 years. This will result in the stock value and the dividend to remain the same for the next 10 years. Even in this situation, you will not lose money and will have significant cash in hand in the form of dividend paid to you every month. When we start talking about gold, we definitely need to talk about the world reserve currency. The world's reserve currency has a significant influence on the valuation of gold and vice versa. US dollar. US dollar is the world's largest and dominant reserve currency. It is powered by the economic powerhouse of the United States of America. US GDP estimated to be close to $18 trillion as of 2015. It is world's largest national economy. Due to the sheer size of the economy, the stock market and the US dollar is subjected to highs and lows. When pushed further, the economy turns into boom and bust. This has major impact in the valuation of the US dollar. Euro. Euro is the world's second largest reserve currency. It is Eurozone's official currency consisting of 19 out of 28 member countries. There are some fundamental weaknesses associated with this currency. Euro provided an alternate to the dominant US dollar, but the formation of euro was more of an emotional decision than an intellectual decision. Freedom of movement within Eurozone is great, but common currency, not a good idea. The euro currency is vulnerable to the economic condition of the Eurozone member states and that makes it unsustainable in the long run. Gold. Gold is the unofficial world's currency. It has been like this for thousands of years. Gold has a distinct advantage when compared to any other investment asset, mainly because the moment you own it, it belongs to you. Unlike real estate, where you still have to pay the property tax even after you own the asset in full, you really own it in full when it comes to gold asset. In addition to financial value, gold carries an emotional value. Advantages of investing in physical gold. It protects your savings, for sure. Investment in gold asset protects money from money devaluation, and that is one of the main reasons people tend to buy gold. Gold is precious. It is a precious metal and carries an intrinsic value. Unlike paper currency, gold will never lose its value. Advantage in gold valuation. Gold valuation is solely based on supply and demand in the world market. Gold cannot be created. It has to be extracted from the mines. It is a precious metal and the demand is always high as it is considered a safe asset. It is due to this situation it is always subjected to higher prices in the world market. Last, it is an emotional asset. For most people, money is an emotional thing. In order to protect the money from inflation, people tend to lock in their money in safe assets such as gold. It does not have an economical value in the society. It does not even have the utility value that can generate cash, but it brings in an emotional strength to its investors. This makes gold a priceless asset. Now, disadvantages of investing in physical gold. The main disadvantage is no cash flow. Unlike other asset classes, investment in physical gold does not generate any cash. This is one of the reasons why some of the investors stay away from investing in gold. No financing or leverage available. There are no bank loans that you can use to leverage your financial investment when it comes to gold investment. Requires liquid cash to invest in gold. Third point is no tax advantages. There is absolutely no tax benefits in investing in gold. The next point is it is not a liquid asset. Gold in any form, it can be bars, coins, or jewelry, cannot be converted into cash immediately. Requires some effort to take it to the seller and convert it into cash. Last but not the least, requires safety deposit box. Gold in large quantities requires a secure place to store. It is not a safe or secure place to store such a large amount of gold at home. Usually, it is better to store it in a bank's safety deposit box. So that's all about gold investment. Hope you enjoyed. Take care. Thank you. Bye bye.